If you put 10% of your portfolio into Bitcoin and wait 100 years, you've got wealth worth $100 million. You've got 100x as much money as you had. So if you want to build wealth, you start by putting a portion of your portfolio into Bitcoin and holding it a long time. If you put 50% of your portfolio, you end up with $500 million worth of wealth instead of 1 million. And if you just convert your $1 million worth of stocks into $1 million worth of Bitcoin and hold it 100 years, you end up with $1 billion worth of wealth instead of $1 million. So you become a billionaire.
Fiat currencies are bound to debase, and eventually all existing currencies, including the United States dollar, will become worthless. This is an established fact that has already played out too many times in our history. In the past, several mighty kingdoms and empires that many thought infallible were brought down to their knees. Their buoyant, thriving economies, unequaled military might, and many legacies have become nothing but a part of humanity's dark history. No evidence suggests that any of the world's existing great empires will be able to avoid this fate. And lots of evidence suggests that none of them will last as long as the great dynasties and empires of the past centuries. According to MicroStrategy's executive chairman, Michael Saylor for the United States, the world's current superpower, the first signs of an impending collapse started years ago, and it's only a matter of time before everything completely unravels. One of the first signs of this impending collapse is monetary debasement, the rate at which the dollar is losing its value every year. During a recent interview, Saylor explains that on average, the US dollar and currencies pegged to it or trading at close parity have lost around 7% of their value every year for the past 100 years. These currencies are one of the most valued currencies in the world right now. Yet, it is very difficult for the average person to build their wealth through them because of rapid monetary debasement. To build wealth with the US dollar or any other top currency, a conventional investor would invest in assets that are considered highly desirable, like US stocks, treasury bonds, or real estate. Over the years, these assets have given investors the illusion that they are earning returns on their investments and actually making money and building wealth. But Saylor says it's all bogus. The MicroStrategy executive explains that the S&P index, the most popular stock index in the world, earns investors about 7% on their investments annually. With the same rate of debasement, this means the index will only help you retain the value of your money, not build more. The situation is even worse with bonds, Saylor notes, explaining that $1 million investment in U.S. Treasury bonds will only be worth about $35,000 after 100 years. So is keeping cash, which given history will lose about 99.999% of its value after 100 years. The business executive adds that only a high-value real estate property will give you 8 or 9% returns, meaning you'll be growing your wealth by about 2% after 100 years. Saylor explains that you will even be performing worse with other strategies, especially one with a diversified mixture of stocks and bonds. So what asset will help you maintain your wealth and grow it immensely over time? According to Michael Saylor, you only stand a chance of building wealth with Bitcoin, which he says will give you a 14% return even if it's just a small part of your portfolio. We will now bring you clips from the interview as Saylor analyzes how a simple Bitcoin strategy will make anyone a millionaire. Don't forget to like this video, subscribe to the channel, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and contributes to the channel's growth. Thanks, and enjoy.
The best you can do with any conventional strategy, or either conventional equity or conventional property, is to keep up with the monetary inflation rate, which means you can't build wealth. You might be able to maintain wealth. On the other hand, if you take the $1 million and you invest 10% of it in Bitcoin and the other 90% in the S&P index, you can look at Bitcoin and say, well, what's the natural organic appreciation rate of Bitcoin? In my opinion, it should theoretically be about 14% a year versus the 7% a year for the S&P index. Because Bitcoin, it has all of the attributes of an asset that's a security, but it doesn't have the liabilities of companies. There's none of the dilutive effects that hold back a company apply to Bitcoin. The problems with companies are they have a management team, they have employees, they have products, they have competitors, they have regulation, they get taxed, they might screw up, they have execution risk. We could talk for hours about ways that companies don't work, but if you've studied corporate history and you look at 100 companies and you say, how did they screw up? You'll see one of those. And if you looked at a portfolio of commercial real estate or other real estate and said, well, how do you lose money? Well, it gets taxed, it gets regulated. There's the mayor of the city does something to it. It gets rent controlled. There's a war. It gets bombed. It gets decayed. An earthquake hits it. A lightning strike hits it. It rots. Insects attack it. Your renters don't pay their bills. Someone actually blows up a bomb in front of it. The neighborhood goes bad. Lots of ways you lose money in real estate. So Bitcoin is digital property. It's like a big tech monopoly, but without the company liabilities. And it's digital property. So it's like good property, but you can move it anywhere in the world. It's weightless. It's indestructible. You don't have to pay to maintain it. So that's how you get from 7% to 14%. I mean, the first thing is you have to generate cash flow to invest. So you got to work hard at your job as a doctor, whatever you do, your vocation, you have to go and you have to generate cash flow or raise money to invest. You have to raise equity, raise debt, or generate cash. Those are the three ways to get the money. Once you have it, the difference between losing 99.9% of your wealth or generating 1,000x more wealth is, do you invest in cash? Do you invest in bonds? Do you invest in diversified equity? Do you make perfect investment decisions, or do you invest in property, or do you invest in Bitcoin? And the range is 1,000x on one end and 99.9% loss on the other end. And then it's just time. You have to let time work. Because the one thing that you can be sure of is time creates chaos and inefficiency. Everybody knows if you look at that house and you don't do anything for 100 years, you can predict the house is going to decay. Everybody knows if you hold $1 million worth of Argentine pesos and wait 100 years, they're going to be worthless. Do you know the peso used to be worth $1? And today, as we're sitting here right now, the exchange rate is 570 pesos to the dollar.
Whoa.
Okay, do you know what the peso was trading at 5 years ago? 30.
30.
Do you know what the peso was trading at 1 year ago? 293.
Whoa.
So you have a very simple example where with the peso, if you waited 23 years, you would have lost 99.8% of your wealth.
During the interview, Saylor discusses the intersection between cryptocurrencies and artificial intelligence and what it would mean for Bitcoin. He explains that Bitcoin and Lightning Network, the Layer 2 payment protocol layered on top of Bitcoin, gives some important qualities that make them attractive payment systems for all entities, including iBots. One such quality is the autonomy that comes with using a truly decentralized system. Another is lightning fast transfers that easily transcend borders and other factors that make bank transfers tedious and terribly slow. According to Saylor, rather than disrupt each other as many crypto critics have predicted since the AI hype started, both groundbreaking technologies will complement each other and facilitate massive explosions in adoption and price growth. Here are more clips from the interview.
I think Bitcoin is digital money, which means that any two entities can trade it instantly. Okay, so that means that if you're an AI bot and you want to trade with another AI bot, you need that, right? Let's come back to a basic principle.
Yeah.
If I have $1 million and I want to trade it 40 times using a credit network, well, all 40 participants need to have a bank account with a local bank. They need to be able to clear through their central banks. And so you have 40 banks involved. You have 40 individuals with bank accounts. Each trade is going to take a month to clear. If I wanted to move $1 million 40 times on the Lightning Network, it would take me 1 minute, like 60 seconds to move it 40 times, and I would pay 1 penny, 2 pennies. So you see the difference is, and all 8 billion people on the planet could do it. 100 million companies, 8 billion people, right, could do it. So you have one system which is instantaneous and nearly free. And you have another, and open, and you have another system which is crippled, slow, and obscenely expensive. And so now you're an AI. Well, how do you actually get a bank account if you're an AI? You can't. AIs aren't people, right? You can't get a credit card. So if I spin up 100,000 AI entities, they can't get a bank account, they can't trade, and why would anybody want to wait 4 years and pay all their money in order to trade 40 times? So as a practical matter, you need a digital network in order to trade. Now, the other point is, if you want an AI to function, you need to endow it with money. So how do I set up a bank account if I'm an AI? Or how do I create a bank account for the benefit of the AI? There's no legal structure to do that, right? Like, so I could create an AI as an endowment, but if you're going to endow an AI, you need to endow it with Bitcoin, because you need to put money into the endowment. You need to assign it the Bitcoin digitally that will last forever, that it has control of. If an AI has Bitcoin, then it can actually generate yield, or it can actually do business. It can buy things, sell things, pay for its own computer servers. You know, university endowments like Harvard, you know, or Cambridge or Yale, they can last hundreds of years. The church can last 1,000 years, but they need an endowment of money or property, and that property needs to be managed by people with legal process. Well, since an AI isn't recognized as a person, right, it can't avail itself of the legal system. So if you want to create an immortal creature in cyberspace, then the way you would do it is you would power it or endow it with Bitcoin. That's what brings it to life. Without the Bitcoin, then it's not an autonomous creature. What it is a shadow.
Michael Saylor is not the only one talking about the intersection between AI and Bitcoin and what it would mean for both technologies. A few weeks ago, former BitMEX Chief Executive Officer Arthur Hayes predicted that Bitcoin will become the food for AI. His prediction was just in time for an announcement for Lightning Labs, the firm that develops the software that powers the Lightning Network. Lightning Labs announced the release of new developer tools that integrate with large language models such as OpenAI's ChatGPT. According to the engineers in charge of the project, the tools will enable AI agents to traverse L402 API and also directly hold and manage Bitcoin via OpenAI's function calls. The tools merge AI technologies, API, and blockchain technologies to facilitate transactions over the Lightning Network. The engineers said they hope the tools will facilitate fast and easy payments for billions of individuals who cannot access conventional credit cards or banking systems and as a result are unable to harness the power of groundbreaking AI tools. The announcement was well received among Bitcoin enthusiasts who believe that the leading cryptocurrency will easily be able to function as a widely accepted impartial reserve currency for AI systems. Do you agree that the intersection between blockchain and AI will be beneficial for Bitcoin and other cryptocurrencies? Please drop your replies as well as your comments on Saylor's interview in the comments section below. Also, sure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.